and then we just enter like that. So the two techniques so powerful for that reason is because you can adapt to it really quickly. As soon as that trend now breaks and pushes down, that now tells us we're bearish. So on the 15-minute, 30-minute time frame, we're now bearish, and we can look for sells. Welcome back team to part 3 of the 3-2 technique. This is the next episode in the Beginner to Winner series. If you're enjoying this content, please make sure you subscribe, you like and comment below, and head over to the Instagram at StrongMoneyForex, where I have a free desk called Mentorship. You can message me, talk to me about the mentorship. It's completely free. I'm opening it up to 50 more people, and once the spaces are gone, they are gone forever. There'll be no more free entries after this next run. So we're going to talk you through now the 2 technique, which is my kind of go-to technique. I use this on almost all of my trading, and I'm going to give you the specific time frames that we're going to use to get us comfortably into these trades. Okay, so the 2 technique is slightly lower time frame. Now, this really is anything below an hour. It doesn't really, the 2 technique doesn't really use the hourly time. Sometimes the hour time frame you can include it, but that's almost like a halfway house. And the reason why this works so well with this style of trading is it gets you into trades that will often play out throughout a day or a couple of days. Okay, so the key is in the exact time frames that you will be using. Okay, so it's very, very similar. I'm going to give you a buy example now. Okay, we've got a bullish trend. Okay, and we have now a bullish range. We know that price is looking to push higher. Is looking to probably retest. And now we've cleared out this liquidity. What will normally happen is we will get a retest into discount. Okay, and that's where we're looking for our zones. Now, in this style, the 2 technique, what I'm looking for here is a 15-minute or a 30-minute zone. And you will find these on the charts every single day, all the time. This is why I use it so commonly, because it's really, really easy to use. Okay, so that's our initial trend, and we've had price come back in now and test premium. What we're expecting, of course, is for price to do that and take out the next liquidity high. That's our first, that's our second. Okay, so that's the expectation of price, is that we're going to keep continuing this trade. We use market structure to teach us that continuation of the trade is the way forward. Okay, so we've got that first confirmation. We've got price coming back into here. Now, very, very simply, we just drop down a time frame. Okay, so let's say that was drawn, that first one. Okay, that first one was on the 30-minute time frame, for example. Okay, so we've got that there. That's our 30-minute time frame. I'm now going to drop down to the 5-minute time frame, and we're going to find us a trend change on the 5-minute time frame. So this, we have our higher time frame zones now, as you can see, and just like before, we are waiting now for price to come into here, start to give us signals that it doesn't want to go higher, failure to break a new low, then a push up, push down, push up, and then so on up here. Okay, the 2 technique works so well because of the time frames it uses. We find our zones on the 15-minute, 30-minute, and then we wait for a structural change on the 3-minute, the 5-minute, or if you want to, the 1-minute. But as you know, I don't like the 1-minute personally. Okay, the reason for that is I find the 1-minute gives a lot of false moves, and most traders, especially new traders, they can't accept the amount of losses it takes to get good at the 1-minute. They'll get some really, really good wins, and then they'll get a massive streak of losses and they give up. I've seen it all the time. I've been there before myself. Very few traders can competently trade the 1-minute time frame consistently, and far too many people that you see on Instagram, social media, YouTube, and all those places, they're bullshitting you. They don't trade it regularly. I've tried, I've tested it. I've been doing this now for 5-6 years, and I'm fully funded, and I'm fully funded using 5-minute charts and above. Sometimes I'll refine on the 3-minute, but very, very rarely. Okay, so what I'm looking for now is a couple of things. We're looking for these breaker structure. We're looking for clues to show us that price is ultimately going to be pushing up. Okay, and giving us further price up. Sorry, giving us further prices on the buy side. We then look for things like this. Let's have a quick look. Okay, failure to make a new low. That's often a key signal. So when we see that and we see price pushing up, let's say price was here, that's where maybe I start paying attention. Be like, oh, we failed to make that low. Okay, that often for me is quite a good trade entry. Okay, when I'm looking at that, I know we're in an area we're probably going to get a long from anyway, but we've got those equal highs there. I don't want to miss the trade, so a lot of the time I'll look at something like that and be like, right, we've got 2 failures now to make a new low. That is an indication that we could be going long. So I'll draw out usually the last down move, I'll do the whole move, something like that, mark on, and then I'll wait for price to, sorry, that move down there, okay, but I'll frame the wick, obviously, because you know there's still demand in there that we could be pushing up from, okay, and I'll wait for price to reach the 50. I'll take the trade like that, okay. So that's one way of kind of entering this, looking for a signal that price is going to change. And again, liquidity high here, we're looking to run out those highs, something like that, and we take out trade just from there. Nice 3R trade. You know, we're pretty much done for the day. If you're trading at 0.5% per trade, you know, 3R has got you 1.5%. You're done for the day. If you can do that 5 days a week, 1.5% times 5 is 7.5%. I think, yeah, it's 7.5%. So if you can do that 3 times per week, you are absolutely laughing. And that's the thing, is you don't need many trades, okay? It's really important to understand that. I'm really bad for over trading. I'll hold my hands up to that. I take far too many trades. But I'm still learning, and I'm still journaling, and I'm still finding out things about my own trading as well. So, you know, you don't need many trades. There's so many times I've got to the end of the day and I'm on like 0.5%. And it's like, if I'd just taken the 2 setups that I knew were really clean, I could have ended up on 3% or 4%. But I've overtraded. So, you know, waiting for these key trades to play out is really important. I'm getting so much better with it these days. So yeah. So that's one way to enter it, okay, on kind of an equal high, failure to break. The classic way is just this kind of usual push up, okay. Got these breaks of structure. We frame the 50% range like that. Okay, we frame it up, and then when price reaches it, we enter on the 50% with stops below the lows. Confident now that we can do this, we can use these stops, because now we've got this new break of structure. Remember, this technically, that is supply. Sorry, that is demand. Okay, so the chance of this now breaking below, chance of that happening is very, very low, because this move has created a major break of structure. Okay, so this is on the 5 minute, the 3 minute time frame we're looking at. Remember, this is now a major break of structure on the 5 minute time frame, which means this low now is protected. Okay, price, if it's going to continue its trend, which is highly probable because of the zone that it's in, okay, should not break below this. So I'm happy now to take my trade at 50% with my stop below the low with a little bit of breathing room. I'll let it run out my high, and I've got myself a nice 2R. That's my first position out. Let's say I was going to hold until liquidity high. I leave my second position up till there, and I've got myself a 7-8R. So this is my favorite technique, is the 2 technique. I use this more than the 3 technique. The 3 technique is more powerful, but it will come up less regularly, of course, because it's higher time frame. The 2 technique is, you know, it's still very powerful, okay, but you will still get you'll get more false moves on this and more false entries on this, and you will get price sometimes that just does that for no reason whatsoever, because that's what price does sometimes. But all you do then is you just change your bias. Be like, right, now we've broken that structure. I'm now going to be looking at shorts from here. We wait for price to get into premium. And it's the same thing. We've got our 3 technique, sorry, we've got our 2 technique, which is the 15 to 30 minute. That's now a 15-minute zone. And then I'm waiting for, on the 3 minute or the 5 minute, I'm waiting for price to come up, do this, do this, do this, break, break, break. And then, oh, hang on, what's going on here? And then we just enter like that. So the 2 techniques so powerful for that reason is because you can adapt to it really quickly. As soon as that trend now breaks and pushes down, that now tells us we're bearish. So on the 15-minute, 30-minute time frame, we're now bearish, and we can look for sells. Okay, so it's a really, really simple way of filtering out trades, getting yourself into better trades and getting yourself into more probable trades. Waiting for these things to play out and waiting for time frames to line up is the key to all smart money trading, strong money trading, institutional trading, ICT, whatever you want to call it, however you want to call it. What we're looking for is high probability entries, and this is the way to do it. Once again, guys, thank you for tuning in. This next video here is going to improve your results and improve your profits. Make sure you check this one out, because this one will make a huge difference.